Thank you. In today's lesson, again we are going to talk about accounting cycle, especially on general journal, general ledger, and trial balance. So it is very simple. As you can see that general journal, it's a book of original entry. This is a book of original entry where all financial transactions are initially recorded in chronological order, that is according to the date of occurrence. So you can see that it has a format that is appearing like that. It has a date column, particular column, folio column, debit column, and credit column. When the date, you need to record the exact date on which transaction has taken place. When it comes to particulars, you start with account to be debited. Then you record the amount here in a debit column. You proceed with account to be credited, and you record the amount here in the credit column. But don't forget what you call narration. Narration is very important because it is a short explanation about the transaction you've recorded. Are we together? So anyways, start with account to be debited, go ahead with account to be credited, and then don't forget narration. So general journal is basically prepared with a purpose. Purpose number one, it is used to record all transactions that do not fit into specialized journals. You know, special journals like purchase journal, sales journal, purchase return journal, sales return journal. Those mainly record transactions that have been made on credit. But of course, other transactions that do not fit into specialized journals, such as transaction related to purchases, transaction related to sales, transaction related to cash receipts, are recorded in general journal. So from there, you need also to remember that general journal is based on double entry system. I hope you remember what double entry system mean. It's accounting method, it's accounting system where every transaction must be recorded twice. That is to say, debit must be equal to credit. Every debit entry must have what you call its corresponding credit entry. So you need to take care. Without taking much of our time, I would like to give you an example. So here we are going even to record a transaction in general journal. We need to proceed by posting journal entries to ledgers, account, and I have also to show you how trial balance is prepared. So do not worry. With this example, A and B company made the following transaction during the month of June 2024. On 1st June, A and B company started a business with 1 billion francs, but cash in hand. You understand that starting a business with this amount of money in terms of cash, it is equivalent to the capital, as long as you know the meaning of capital. On June 20th, this company bought a piece of land worth 700,000 francs by cash. So we are going to see how to record those transactions in general journal. Wait. We are required to record about transaction in journal. Number next, I have to take you to a ledger. We need to post journal entries in ledger. Number next, we need also to prepare trial balance. So let us start without taking much, without delaying. So general journal is supposed first of all to have a title. The title will be A and B Company General Journal in June 2024. Even this title, it's a must. Include the company name, include the type of book you are going to record in, include period. Do not forget all of those three main components. But we are going to record the transaction by respecting double entry system, where debit is supposed to be equal to credit. So General is going to appear like that. Allow me to explain you the following. Yeah, you can see that in June 1st, A and B company started with 1 million baht cash. These are assets. These are assets that are used to start a business. So the assets, when asset increases, they need to be debited. But even though they are assets, automatically they are assets that are also equivalent to the capital. You know, accounting question stated that asset must be equal to owner's equity or capital plus liability. So as long as one starts a business with only owner's equity without liability, in that case, asset will exactly be equal to the capital. So when capital increases, it is supposed to be credited. So that's why we debit cash here with this amount and a credit capital account with the same amount. So this is what I have been telling you by the names of narration. So we need to call it the amount of money used to start a business. You can call it initial balance. You can even call it balance brought down. You can even call it balance carried forward. You can even call it beginning balance, but for me, I'm choosing to call it initial balance. I hope you understand. So on June 20th, A and B company bought a piece of land. Land also is one of example of fixed asset. So when asset increases, you need to take care how to be debited, but we need to credit cash account because we spend money to buy land. And remember, when asset in terms of cash also reduce must be credited. There is a rule of debiting and crediting. When asset increase, it is supposed to be debited, and when asset decrease, it is supposed to be credited. So, because of the fact that we acquired the land, that is to mean our assets have increased. So they need to be debited. And because of the fact that we spend some amount of money, equivalent to 700,000 by buying land, so our part of assets also have decreased. That's why cash needs to be credited with the same amount. I hope that we are together. So after all, we need to do what we call the total. We need to do a total at the final date of June, and you can see we need to add up this column. 1 million plus 700,000, it is 1,700,000. So you can see debit is now equal to credit. This is how we record such a transaction. Here narration, you need to mention. I've left you with this space to guess what will be a narration. But of course, you can call it the way you want. But for me, I can tell you that in narration it is bought land by cash. Bought land by cash is supposed to be inserted there. Hope that you understand. So, without taking also much of our time delaying, we'll try to proceed with the ledger. When we post government into ledger, we need to use what you call account. Account should be presented in various ways, either T format, either open format account, but for me I'm going to use this T format. You can see that it is appearing like a T. So it is very simple. So we need to list all of the accounts we have recorded in journal. So account number 1 is cash account. So what is debited in journal must also be debited in ledger. So cash account, remember when we record transaction in this side, we want to mean that cash account is being debited and is being increased in terms of value. When we record transaction in credit side, in this side, we want to mean that cash account is being credited and it is being reduced in terms of value, especially when this account is the asset. So you can see that cash account in general journal has been debited. So the same here, cash account need to be debited but with the capital. But according to the double entry system, when cash is debited with the capital account must also be credited with the cash. That is to say, when we go ahead with the capital account, you can see that capital is now credited with the cash account, the same amount. On transaction number 2, we are going to see land account and a cash account. So land account is appearing like that. You can see that land is supposed to be debited with the 700,000 by cash, but cash also must be credited with the same amount. In terms of land, we need to return back to cash account, and we see that cash account has been reduced with 700,000 due to the fact that they have been spent by buying land. So cash account is now appearing like this. When it is like this, you need to balance an account, especially by finding balance carried down. So what does this mean? Balance carried down is found at the end of every month. Every professional accountant should do balance account at the end of every month. That is to say, if for example A and B company started with 1 million as a capital on 1st June, and on 20th June bought a land of this amount. Now, what is the remaining balance? What is the balance at the end? You can see that they are going to take 1 million minus 700, and you see the cash value, cash account value, the ending balance. So you can see that balance carried down is supposed to be found in the side where there is minimum balance. So it is equivalent to 300,000, because it is 1 million minus 700,000, which is equivalent to 300,000 solid Rwanda dollars. So after finding balance carried down, debit side must automatically be equal to credit side. You can see that we are having 1 million here, we are even having 1 million here. So when you end a month with a particular balance, you need to start the next month with the same balance. So the amount of money that a business starts being at the beginning of a particular period, particular month, is called balance brought down. So the same amount, this is supposed to be brought down in the next month. Here we are working in June. So if you are working in June, next month you will be in July 1st. Should be have balance brought down equivalent to balance carried down. This is supposed to be done at last date of June, last date of month. This is supposed to be done at first date of next month. So we need to balance all accounts. Let us also go with the capital account. The same, initially we have been having capital account which is credited with cash equivalent to 1 million. So at 13th June, balance carried down, the balance at the end will be the same 1 million, and balance brought down will be again 1 million in the credit side. Balance carried down is supposed to be found in a column in the side which has less amount, so a debit side and credit side can automatically be balanced, and the balance breakdown is actually found in the same side where account has been having a high value. You can see. Now you apply the same rule to land account. You can see that initially land had been debited with the 700, but in terms of cash, you need to find the balance carried down of 700,000. Yeah, balance carried down, and at the 1st July, we need to have balance brought down of the same amount. You can see. So I hope that you understand. Automatically, when we finish general ledger, we need to go ahead with the trial balance to check the arithmetic accuracy, to check whether maybe no errors have been committed. With the trial balance, as its name implies, debit balance must be equal to credit balance, because accounting double entry system has been respected through working general and trial balance. So debit balance here must be equal to credit balance. When they don't balance, it means that some errors might have been committed. Most of the time, even though they can be balanced when errors still are there, especially when you've omitted some transaction, still trial balance can balance. But most of the time, failure to balance is an indication that some errors might have been probably committed. So let us see the trial balance of 𝒂 Company Limited. So it will be appearing like that. The format is, we have particulars where we record accounts, debit and credit. You can see that here cash account has been having balance brought down over 300,000. Balance brought down. If balance brought down is found in debit side of an account, you record in debit side in trial balance. If balance brought down is found in credit side, you need to record that amount in credit side. That is the rule. So cash has been having balance brought down equivalent to 300,000, but in debit side, you can see in debit side. That's why in trial balance we need to record the same amount in actually debit side. Land also has been having debit balance brought down or being in balance in where you can see also in debit side. So we need to transfer. We need to transfer. The same balance for land, but in debit side because it is where it is found. So capital. When you see capital, it is having balance brought down equivalent to 1 million, but in the credit side. So in the trial balance, capital will be appearing in the credit side. Then you make a total, you find that it is 1 million, 1 million. Wow! That to say, debit must also be equal to credit in trial balance. This is the only evidence to prove how maybe there is accuracy toward recording transaction journals and posting journal entries through readers. So, dear my student, I cannot leave you without giving you a homework. It is something you are familiar with, and you know practice makes perfect. So, it's a simple question. When you manage to do it, you need also to clap for yourself. It's a question number one that you need to write short notes about accounting equation. Write short note about accounting equation. So let's see in the comment. Otherwise, this marks the end of our lesson. And you know I love you. Thank you. See you next time. Thank you.